welcome back to another market breakdown. In this video, I would like to speak about long-term investment ideas about the S&P 500, which tracks the 500 companies in the US. And I like to because this gives you an indication where the broad stock market is going. And I think this year is very interesting. And I would like to give my view about price action. And what we have right now is the yearly chart. Unfortunately, I don't have all the data, but I have compiled and asked a friend, and I got it from him. It's not here on Trading View, but you can actually see all the years down. Anyway, so the yearly chart, what we have here, we have a push coming back in the pandemic, another push and another small pullback, and a third push. So whenever you have a three pushes, that's a parabolic wedge. So what is a parabolic wedge? It's a if we go to the monthly, if you connect, you cannot actually connect them, but if you connect them, you can get this, and this is a parabolic wedge. Whenever you have a parabolic wedge, that means it attracts profit taking at the highs, and in the yearly chart, what happened here is very interesting as well. If you look at the yearly chart, we have just traded above the last year's high, which not last year, I mean 2 years ago high, which is 2021. We just traded a bit higher, which means we triggered the long order there on the yearly chart, but then reversed it immediately, which means whoever who bought there, now they are in pain. When I say in pain, they are in a loss. Okay, so what in this scenario, what can happen? Many things can happen. It's more likely to develop to a trading range, and we can actually get a pullback first. What is it? A pullback maybe for 50%, and we're almost there, maybe around this zone. But this is the yearly chart. Sometimes it goes even higher. So the yearly chart suggests a trading range. The start of a trading range. It's okay. What you do in a trading range, you buy low and you sell high. You buy low, you sell high. You buy low and you take quick profit. You don't hold for and hoping the price is going to go higher. Maybe it's going to go higher because the yearly chart has been in a bull trend for all eternity, for all the time, which means there is a 60% we're going to actually make a new high and only 40% chance we're going to go lower. However, if we go to the monthly, I think this is where things are more interesting here. So what happened? In the beginning of the year, the Fed started increasing the rates, interest rates, and that's panic in the market, and we had the first leg. And let's say this is the first leg. I don't know if we're going to go lower or not, but let's say this is the first leg. What is happening now is more interesting. First, if we look in the past, this is the pandemic's high, and we still didn't close that gap between the pandemic's high and the all-time high. The markets are more likely to come back to this zone to find if there is buyers or more sellers. All right. Plus, we have a very interesting phenomena here, which is the this gap here, and it's actually between. This is if you can watch this, we can pick this. What you see here on the weekly, on the daily, all this is a gap. This place. So I put 4,000 because that's a round number. So whenever there is a round number and there is an important price and the price just gaps up on the monthly, on the daily, and the monthly, you're more likely to get a measured or measuring gap. So we already got that. So you measure one, 2. So that's a measured gap. And that's where both took profit. So the interesting number right now around this zone, that's why you see all this consolidation here, is the 4,000 number. Okay. So if we go into sell off and come back, and since the interest rates are higher, so the macro suggests that we're going to go lower, it's more likely to go lower. But is it now? Is it going to happen now? That's the question. So if we look in the monthly, we have another wedge. Okay, one, two, three. So this is a wedge. What happens in a wedge? It provokes or encourages profit taking in the side of the bears. All right. So that's why we get this reversal here, and then whenever you get a reversal from a wedge, it's more likely to go two legs sideways up. Okay. So we already had the first leg. This is the first leg. If I think what is happening now is we actually pull it back, and we're gonna hit higher for another leg. All right. So that's why I put 4,423 as a potential target. Maybe we're gonna get there at some point this year, and then I will look to short. Okay. So the first, or what the price action on the monthly suggests, is we're gonna get, what is the we're gonna get something like, we continue this like from here, one, two, which makes this a two-legged pullback of what? Of the first leg on the yearly, which means we might get another leg lower. And I'm putting these prices lower. I'm gonna show you how I got them, and I'm not sure which one is gonna be there, but this is what the chart suggesting right now. So one, which means this A, B, C, D, and then maybe we're gonna sell off. All right. So this is the scenario on the monthly. It's more likely to get a two-legged pullback, one, two, three, two-legged, two legs up higher, and then we need to get another leg lower. That probably is going to be as large as the first leg. Maybe it's going to happen this year, maybe next year, maybe we're going to go just sideways. So it's going to be just something like this. All right. Okay. So why I have this number here, 2,900, let's say 50. Let's put 50, so it's going to be a bit like a round number. So as I mentioned before, the market has made a measured move based on this 4,000 number, which is a round number. And whenever we had a round number, we consolidated and then we went up. Okay, where is whatever we had it, we consolidated, we closed the gap. Okay, 3,000, we consolidated a little bit here, and then we went up. But what happened in the 4,000, we never actually closed any gap here. We came back this year, we closed it, but for those, the most likely to need for a measured gap based on that round number. So what I like to do is to take a measured move based on that number and project it lower, which is gonna take us to this number. Why I do have this? This is as last reserve. I will show you after. Okay, so that's why I have this number, more likely around, let's say 90. So it's gonna be more like rounded. So we are more likely to come here, which also an interesting zone. Why? Because that's the pre-pandemic zone. All of these can act as support for bulls to buy. So definitely I'm gonna look, if we come there, I'm gonna look to buy there. All right. So why I have this here? Okay. Let me look at the weekly. I think that's why I placed it there. All right, I want you to watch this very closely. What we have here is a price made a high and then a low and then a high. What is that? That's an extended triangle. Okay, so whenever you have an extended triangle, which the price making new highs, new lows, new highs, new lows, and traders are all confused with the hell is going on. So the market is whenever you have a triangle, the market sometimes come back to the middle of that triangle. So the middle sometimes I'm gonna be say so this is the number. It is not actually close there. So that's another zone. Maybe we're gonna come there. And why this is an interesting zone? Because when we broke from here on the weekly, from this range, we have left this zone here between this high and this high, which is gonna act as a gap. All right. So I'm not saying we're gonna come there, but that's definitely a place to look to buy. So all these zones are potential buy zones for the next investing or next leg higher. And I hope you find this very interesting. Why I have this price here? Because on the weekly, if you see this bar here, this small letter bar, it's the price traded lower, you see, which means we triggered bears there, and then we made this move. There are more likely some trapped bears there. And if someone is still holding this, the price sometimes finds support there, which means they're gonna get out as break even. So these I have it as also a potential target for the bears. And that's it. Not actually this, but just this. And then we can put it a little bit green to match the others. And that's it. Okay, the monthly chart, or it's suggesting another leg higher from this high, lower high, and then maybe a bull flag to close this zone here, to finish in this zone here. Maybe we're gonna get something like this, and then come here, and then maybe some consolidation, because the yearly chart still suggesting a trading range. So you look to buy low and sell high. I do not hold for too long. Okay, that's it, guys. And I hope this was a clear review on the state of the stock market. And remember, also in the yearly chart, we still have some triggered bulls on the yearly chart are trapped here in a bad trade. So they both, once the price started breaking higher, and sometimes the market comes back to the high and then make another leg lower. All right, which means those traders get out at break even, and then maybe it's gonna be a normal trading range, which is gonna be defined by these ranges like this, a normal one. So do not hope for too much if you are long, and do not hope too much if you are short. And that's the state of trading ranges. It makes you think, oh, we are going so much lower, then it reverses up. And it makes you, oh, going too much higher, and it reverses down. And that's how trading ranges works. You buy low and you sell high. Okay, first I'm putting this layer here at 3,190 as a very, very interesting zone to buy if we ever come there. And also another thing, if I like to notice, from the pandemic low, We have increased it by 100 around 20%. And we have been a bull run for many years. And I don't have data here, but the chart actually is still parabolic. And if you ever heard, the average return on the stock market is around 8%, 90%, 10%. That's the average. If we were gaining 100%, 200%, 300% on the long side, that means in order for the price to generate 8% as an average, the price has to come back at some point to the average price and close that average. And I don't know what is going to be the average, so I'm putting these prices here. And from the high, if we met from that high, if we bring the price lower, you see this is going to be 45%, this is going to be 50%. But if we ever come here, the probability of coming here is very low. It's going to be 54% drop. That doesn't happen often. So when things doesn't happen very often, the probability of reaching the low of the sometimes the market comes even to whenever you have an extended triangle and you break higher, sometimes the market finds support at the low of that where the move has started. Okay, so I'm not saying the price is going to come here at the low of the pandemic, but the probability is very low that ever in our life we're going to come there. All right. So, as a good risk and reward ratio or a good reasonable trade, I think the 3,190 is a good zone to look for longs. Also, I think also the 3,000. This also we can put it rounded. That's also another round price. The 3,000 zone also interesting, and also this open gap here. Sometimes the price finds support there and then goes higher. Okay. Mm, that's it, folks. And I hope you find this interesting and it helps you and gives you an idea where the market can be hidden and why it's going to be hidden there in terms of price. This is all price action. This is not listening to news. If you listen to news, they're all yelling, we're in a recession, we're in blah, blah. And they were saying this in the beginning of the year, and the market has been rallying since then. Look, all of this is still 15%. So if you listen to the news, they are always going to be misleading you. That's what happens in whatever news you are listening to. But the only thing I really watch and I care about is the charts. Why? Because that's what institutions are doing, and they are the ones who move the market. If the market is going higher, that means institutions are buying. Why would I need someone from a news or a journalist to tell me what to do? If I see the market is going higher, that means I need to find any way or any position to get long. And also, if the market is going lower, also we have to be careful if we are shorting the markets because the yearly chart is still in a bull run. Okay, what we are trading here is a pullback on the yearly chart. And what I would like to see, as I said on the monthly, as a complex pullback, which is, let's say, this is the first leg. I want to see another leg lower, and that's a good buy. I don't know. I don't know. It's gonna be around this zone. It's gonna be around the zone. Well, we don't know. So we trade what we see, and that's it.